Good morning, ladies and gentlemen. Welcome to today's morning brief. I'm Joseph Novichkov, Senior Analyst at GDMFX. Today's outlook will start with the Japanese yen. It swung between gains and losses on conflicting signals over whether Japanese Prime Minister Shinzo Abe is considering dissolving parliament and postponing a planned sales tax increase. The yen weakened on reports of a potential delay to raising the levy until 2017. Before the strengthening, of course, after Japanese officials said no decision had been made, the yen gained 0.4% to 115.36 per dollar this morning, having declined as much as 0.2%, and of course it touched 116.10 yesterday, the weakest level since October 2007. In Europe, the European stocks index futures declined as investors considered valuation after equities extended a 5-week high. Investors are also watching economic reports to gauge the pace of the recovery on calls for the European Central Bank to expand its stimulus program. Data from the European Union's statistics office at 11 a.m. today in Luxembourg may show euro area industrial production gained 0.7% in September from August, rebounding from its largest drop in almost 2 years. The euro is holding steady at 1.2465 versus the USD. A little bit more interesting, moving to UK, the Bank of England fired its chief currency dealer a day before he was faulted in an independent investigation for failing to alert his superiors that traders were sharing information about client orders. Martin Wallet was dismissed by the Bank of England yesterday for, of course, serious misconduct relating to failure to adhere to the bank's internal policies. That's according to the information, a statement by the central bank today. For the sterling, with high volatility expectations at 10 a.m. GMT is the Bank of England's quarterly report for inflation. The GBP is holding steady before the data at 1.59 US dollars. Moving to commodity sector, gold over there swung also between gains and losses as investors weighed whether US interest rates will rise, and after assessed in the largest exchange-traded product backed by the metal, posted the longest slump in a year. Gold right now is heading for the first back-to-back annual retreat since the year 2000. Holdings in the SPDR Gold Trust shrank for a 6-day to a 6-year low yesterday in the longest slump since November 2013. Bullion is predicted to drop to $1,120 per troy ounce by the end of the year on the dollar's strength. The collapse in oil prices may deter investment in exploration and production projects predicted on $100 per barrel crude, according to the energy minister of the United Arab Emirates. The Organization of Petroleum Exporting Countries, including the United Arab Emirates, will meet on November 27 to assess the market and production. Saudi Arabia and Kuwait have resisted calls for the group to cut production, while Libya, Venezuela, and Ecuador have asked for action to keep prices from falling lower. Now, right now we're looking for a $77.50 per barrel. That's all for today. Thanks for watching. Keep an eye on the economic calendar. Important events are coming up in less than an hour. Thanks a lot. Bye-bye.